What types of taxes do C Corps have to pay? Well, on an annual basis, the C Corp files a tax return that gets ultimately taxed at the federal level of 21%. So all of your corporate taxes, whatever that bottom line is, you are taxed on the profits at a 21% rate. Now, that doesn't really incorporate payroll taxes, which as a C Corp, you have to pay yourself somehow, right? So you then take that income that you have and you can put yourself on payroll. You can give yourself a W-2. You can give yourself a 1099. Ultimately, any profits left over in the business will have to get through to the shareholders somehow. So you can either take that as dividend income, which, that's what brings into the concept of double taxation, where your profits at the corporate level are taxed, and then you don't get a deduction for the dividend income that you then take out of the company. So what people like to do is then put themselves on payroll so that they can receive then their salary as well through the C corporation, and then ultimately pay the payroll taxes on that too. So you would ultimately be, on the hook for the payroll tax compliance aspect of that as well. You can elect to be considered a S corporation, which takes that reporting requirement away from the corporation themselves, and you file what is called an 1120 subchapter S tax return, which means that you as an individual receive the flow-through entity profits onto your personal tax return and pay taxes personally as opposed to through the corporation. The one caveat with the S corporation is it doesn't work for all entities. You have to be a domestic member of, domestic meaning in the United States, and there has to be less than 100 shareholders. So it doesn't work for large groups, and it doesn't work in all cases with some foreign individuals. But you do need to be those requirements for an S corporation election. Once you've elected to be an S corporation, you are locked in for 5 years and need to follow through with the requirements accordingly. The flow-through entity basically means that all the profits of the corporation flow through to your personal return. So any profits that you would be making above and beyond your reasonable compensation that you are required to take as an officer of the company, that reasonable compensation would be one portion of it, and then anything above and beyond that would be reported as income on your tax return. So you would be required to make quarterly estimates accordingly to the government so that you aren't considered underpaid for your tax year.